Welcome to BigONE Weekly News Update. I'm Mia. The cryptocurrency market was shaken last week by the largest hacking incident in its history, as the prominent exchange Bybit suffered a $1.5 billion theft. The attack, attributed to the North Korean hacker group Lazarus Group, resulted in the loss of 401,000 ETH, 90,000 STTH, 8,000 METH, and 15,000 CMETH. This staggering loss equates to Bybit's entire annual profit. Investigations suggest that the hackers manipulated the transfer process for Bybit's ETH cold wallet, draining its assets entirely. Despite the breach, Bybit assured users that its reserves could cover the losses, and with industry support, the exchange continues to operate normally. Surprisingly, Ethereum (ETH) prices rose above pre-hack levels, possibly due to Bybit's aggressive ETH purchases using reserve funds. Meanwhile, Bitcoin (BTC) closed the week at 96,250. The hack coincided with a volatile week for global markets. U.S. stocks, after reaching midweek highs, plummeted due to poor real estate data, a drop in consumer confidence, and rising long-term inflation expectations. The S&P wink with tongue sticking out global U.S. February services PMI further dampened sentiment by falling below 50, underperforming even Eurozone countries. Amid the uncertainty, gold prices surged to a record high, nearing $3,000 per ounce, while funds flowed into European and Asian equities, boosting Chinese and Hong Kong markets. Institutional interest in crypto ETFs grows. Despite the turmoil, institutional interest in cryptocurrency ETFs continues to rise. Recent 13F filings show that institutional holdings of BTC ETFs increased from 25.9% to 28.6%. While ETH ETF holdings surged from 13.7% to 23.0%. The number of BTC ETF holders grew from 1,202 to 1,669, and ETH ETF holders increased from 349 to 483. Hedge funds, in particular, have expanded their positions. Their share of BTC ETF holdings rose from 8.3% to 10.6%. While ETH ETF holdings jumped from 2.5% to 6.2%. Analysts attribute this growth to increased arbitrage opportunities in CME ETH futures, which have outperformed BTC futures in recent months. Bitcoin ETF inflows, a closer look. Since its launch in January 2024, the Bitcoin ETF has attracted $38.6 billion in net inflows. However, only $17.5 billion, 44%, represents genuine buy-and-hold investments. The majority, 56%, is linked to arbitrage strategies, where short positions in Bitcoin futures offset ETF inflows. This suggests that the actual demand for Bitcoin as a long-term asset may be lower than media reports indicate. The top holders of Bitcoin ETFs are predominantly hedge funds and trading firms, such as Bervan Howard, D.E. Shaw, and Susquehanna, rather than traditional wealth management companies. These institutions focus on exploiting market inefficiencies rather than long-term capital appreciation. Looking ahead. As February ends, the cryptocurrency market faces headwinds. Bitcoin has fallen nearly 5% this month, underperforming its 5-year average decline of 17%. The Coin 50 index, tracking altcoins, has dropped by 14%, reflecting concerns about altcoin supply and diverging sentiment between institutional and retail investors. In the coming week, market participants will monitor key macroeconomic events, including U.S. durable goods orders and the PCE index, as well as the expiration of U.S. crypto futures contracts. While the market remains volatile, the resilience of ETH prices and growing institutional interest in crypto ETFs offer a glimmer of optimism amid uncertainty. Join BigONE today and take advantage of the growing cryptocurrency market.